Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. Where there was a slight increase in these rates in both Baghdad and Erbil. To expand this explanation into more detail, we need to break down the key elements of this economic situation, considering the broader context, reasons behind such changes, and the effects it can have on the economy, businesses, and individuals. First, let's talk about exchange rates themselves. Exchange rates represent the value of one currency in relation to another. In this case, the value of the Iraqi dinar is being measured against the US dollar, a common global benchmark for currency comparisons due to the dominance of the US economy in international trade and finance. When exchange rates shift, it often indicates changes in demand for currencies, which can result from multiple factors such as economic policies, political stability, trade balances, inflation, and even speculation by traders in financial market. The specific shift described here shows that the value of the US dollar increased slightly compared to the Iraqi dinar. This means it became more expensive to buy US dollars with Iraqi dinars. The increase was relatively small, from 149,800 dinars in the morning to 149,900 dinars by the close of trading at two major exchange markets in Baghdad, the Central Al-Kafir and Al-Harithiyya stock exchanges. These markets are key in determining the official exchange rates in the capital city. Exchange rates don't change arbitrarily. There are usually underlying factors that cause such movements. In the case of the Iraqi dinar and its relationship to the US dollar, various factors could come into play. Iraq is heavily reliant on oil exports, which are typically priced in US dollars. Any fluctuation in global oil prices can affect the demand for and supply of dollars in Iraq. When oil prices rise, Iraq receives more dollars for its exports, which could strengthen the dinar. Conversely, if oil prices fall, there is less demand for the dinar, which can weaken it against the dollar. Another factor that could influence exchange rates is government policy, particularly decisions made by Iraq's central bank. For example, the central bank may adjust interest rates, increase or decrease the money supply, or intervene directly in currency markets to stabilize the dinar. These actions can either strengthen or weaken the currency, depending on their nature. International relations and political stability also play a crucial role. Iraq has faced significant political challenges in recent years, and instability can create uncertainty in financial markets. Investors and businesses tend to move their money to safer currencies, like the US dollar, when there is political uncertainty in a country. This increased demand for dollars can push up the exchange rate against the local currency. Inflation, too, is a key factor. If Iraq experiences higher inflation rates compared to the US, it can erode the value of the dinar. Higher inflation means that the purchasing power of the currency declines, making imports more expensive and thus increasing demand for foreign currencies like the dollar. Speculation in financial markets also contributes to exchange rate volatility. Traders and investors might bet on the future direction of currency movements based on their expectations about economic policies, inflation, or global commodity prices. If there is a widespread belief that the dinar will weaken, this can lead to higher demand for dollars as people seek to protect their wealth from currency depreciation. Al-Kafir and Al-Harithiyya stock exchanges, mentioned in the paragraph, are critical centers for currency trading in Baghdad. The prices set at these exchanges are closely watched by businesses, investors, and even ordinary citizens, as they provide a benchmark for currency exchange rates across the country. On this particular Saturday, the closing rate for the dollar against the dinar was 149,900 dinars for every $100, up from 149,800 dinars earlier in the day. This rise, while seemingly minor, reflects the broader trend of increasing dollar demand or decreasing dinar demand. Stock exchanges act as hubs where currency traders, financial institutions, and businesses buy and sell currencies in large quantities. The prices set on these exchanges can fluctuate throughout the day, depending on supply and demand dynamics. These fluctuations are often driven by a combination of factors, including local economic conditions, international market trends, and political events. The fact that the dollar rate increased between the morning and the close of trading suggests that there was more demand for dollars as the day progressed. This could have been due to various reasons, such as increased business activity, geopolitical news, or expectations of future economic changes. Many people rely on them to convert their money for various purposes, including travel, business transactions, and savings. The slight increase in the exchange rate means that it became more expensive for Iraqis to purchase dollars from these stores. Specifically, the selling price at these stores rose to 151,000 dinars for every $100. While the buying rate was 149,000 dinars. This difference between the selling and buying prices is typical in currency exchange operations, where the exchange store adds a small margin to cover its costs and generate a profit. This increase in the exchange rate means they have to spend more dinars to acquire the same amount of dollars. This can have a ripple effect on prices for goods and services, especially those that are imported from other countries and paid for in foreign currencies. As the cost of buying dollars rises, so too does the cost of importing goods, leading to higher prices for consumers. On the other hand, those who are selling dollars to exchange stores may benefit from a slightly higher rate. If someone has dollars in hand and wants to exchange them for dinars, they will receive more dinars for their dollars than they would have earlier in the day. The buying price was similarly lower at 149,750 dinars. The differences in exchange rates between Baghdad and Erbil can be attributed to local market conditions, including the relative availability of dollars and dinars, as well as regional economic factors. Erbil has a somewhat distinct economic environment compared to Baghdad, partly due to the semi-autonomous nature of the Kurdistan region. The region has its own government and some degree of economic independence, which can lead to variations in exchange rates. Additionally, the availability of dollars in Erbil may differ from that in Baghdad, affecting the local supply and demand balance. The slight increase in the exchange rate of the US dollar against the Iraqi dinar may seem insignificant at first glance, but it has broader implications for Iraq's economy. A higher exchange rate means that Iraqis have to spend more dinars to purchase the same amount of dollars, which can lead to inflationary pressures, especially for imported goods. Iraq is a country that imports many essential items, including food, medicine, and consumer goods, all of which are often priced in dollars. As the cost of importing goods rises, businesses may pass these higher costs on to consumers in the form of higher prices, leading to inflation. Inflation erodes the purchasing power of individuals, making it more difficult for people to afford basic goods and services. This can be especially challenging for low-income households, which spend a larger portion of their income on necessities. The government may also be affected by these changes in exchange rates. If the value of the dinar declines relative to the dollar, The government's ability to finance imports and repay foreign debts may be strained. This can lead to fiscal challenges, especially if the government relies on dollar-denominated revenue from oil exports to fund its budget. The changes in Baghdad and Erbil indicate a rise in demand for dollars or a weakening of the dinar, possibly due to economic, political, or speculative factors. While the increase in exchange rates may seem minor, it has far-reaching effects on business.